Crypto Kids, in this video, I'm going to show you what I personally believe is going to happen next to Bitcoin. In order to provide evidence to those theses, I will share with you volume-based TA. We will also go over a trading system referred to as Consensio. You may have heard of it many times here on this channel. It is a trading system that looks into the 3, 7, and 30 SMAs on the 4-day time frame. And it was developed by the late legendary technical analyst Tyler Jenks. We'll also observe the downward sloping trend line, which Bitcoin broke to the upside from, what it means, and the EMA ribbons. When we're done with the TA on the 4-day and daily timeframes, I will pivot to a point of discussion that I think is very crucial to talk about, and it goes over the macro analysis for Bitcoin. It's about inflation. It's about how inflation has skyrocketed ever since President Nixon abolished the gold standard, and what I'm doing to hedge myself against that very inflation. So, as always, guys, if you do end up enjoying this video, do me a favor and destroy the like button because it helps push this video to a wider audience and onboard more people to crypto. It's for free and it helps the channel a lot if you can destroy the like button. And if we can reach 500 likes, that would mean the world to me. If you enjoy these updates, go ahead and subscribe to the channel. We're very close to 70,000 subscribers, and watch something called the Crypto Late Night Show, which we developed as a completely brand new format, never before seen in the cryptocurrency industry. It's like a Jimmy Fallon, Jimmy Kimmel, Jay Leno, but for crypto celebrities. You can find it under Crypto Late Night Show on the channel page. Okay, let's get started. Let's start with the volume analysis, and then we will combine it with the moving averages and downward sloping trend line. I have two volume-based TA talking points. One of them is the almost Bollinger Band looking like thing. There are two green upper and lower bands, and in the middle is the VWAP. I want you to focus on this middle blue line. The VWAP is like the downwards trend line that we have on the candlesticks, but instead of basing it off from the candlesticks, we base off the trend, the short-term trend from volume. So realistically, unless Bitcoin breaks above currently $83,189, the volume-based trend in the short term is not going to hit an uptrend. Bitcoin, yes, has broken out of this downward sloping trend line, meaning an uptrend has begun. We've not started we're not in a bullish trend because that would require you to create a higher high. We've not done that so far, but we are in an uptrend according to the candlesticks. For me, because at the point of the cycle, we are not in an area where Bitcoin establishes a low and begins the bull cycle, I like to be more conservative and I like to be a bit more cautious. In bull markets, it pays dividends to be more bullish, even in bearish looking structures. That's how we made good money in the last bull market. I'm calling it the last bull market because it's behind us. That's how we did genuinely very well because we were more bullish in bearish possibilities. That's the rule of thumb for a bull market. In the bear market that we've been operating within from October 2025 and onwards, it pays more dividends to be bearish, even in bullish looking structures. So there's no need to go into any risk, unnecessary risk from my point of view. And I like to take things from a conservative approach. So for me, until or unless the volume-based VWAP trend is broken to the upside, I'm not going to consider a real uptrend in play because that can give us resistance. It has given us resistance and a rejection. In January, we fell roughly about 33% to the downside following that rejection from the VWAP. Now, we can combine the VWAP with the VRVP. The VRVP is a graph that demonstrates where most trader activity happens. It shows you where people are actually buying and selling Bitcoin. There are two very obvious ranges. One range looks into the bear flag that was created from November all the way until January. And a second range is looking at the bear flag that has been created from February now all the way until April. We're almost in May. In this range, the most amount of buying pressure happened at $66,000. That is the support of the bear flag, which Bitcoin is still within. And then you go to the top of the bear flag, which we're at now, $78,000. From that point all the way until around 82, 83, essentially the VWAP, there isn't much volume. And when the prices of an asset goes into an area of low volume, it goes quickly. I mean, it goes through it very quickly until the next point of high demand, which kicks in at the VWAP. So that's why it matters. That's why the VWAP matters, and that's why it's a good thing to combine with the VRVP. So in a nutshell, if Bitcoin is able to break above the 78.79, you'll be breaking above the bear flag's resistance. So if you have a confirmation on, I'd like to have 2 daily confirmations, 2 daily confirmations above the bear flag resistance with good volume, then I think it's very, very reasonable to expect an $84,000 Bitcoin. Why? Because you have the VWAP, you have low liquidity all the way until 84,000. You have the CME gap at $84,000. You also have a couple of other things like the EMA ribbons that on the should be the 4-day time frame. The highest point is the 83.84 level. That has given us good resistance in January, led to a 33% correction to the downside. So the EMA ribbons do play an important picture for Bitcoin in the short term. And when I look into my Consensio trading system that's built up of the 3, 7, and 30, unfortunately, we don't get a level of which Bitcoin can exceed towards. All we can tell is that Bitcoin is doing something rather good, and it gives us a slight dose of hopium that perhaps Bitcoin actually will go to 85K, not get rejected right now to 68 and continue falling from the bear flag that has been created. And that is the crossover which has taken place between the 3 and 30 simple moving average. This is an early sign that the asset is about to do something bullish. All right. The last time that Bitcoin did such thing in a similar point of 4-year cyclical structure was at the low of the bull market. But I need to point out we also did the same thing as Bitcoin created a fake out before a massive colossal crash downwards towards Q4 of the midterm year, which we're in. So I don't see this bullish crossover between the 3 and 30 as something that takes us into a new all-time high. Although the S&P is at an all-time high, I think there will be a divergence between Bitcoin and the S&P, which will lead to a more severe crash for the S&P in 2027. That aside, I think it will actually lead to a higher low, or sorry, a lower high. So not flip the trend from bearish to bullish, but we go higher, we reach into the 84, 83, 85, and then we see a rejection to the downside. That is my expectation for Bitcoin. I like to keep things simple. I don't like to overcomplicate things. I think there's a higher chance that Bitcoin is able to pull through this resistance line, escape the bear flag, and fool everybody, go to the 83, 84, 85 level, liquidate a bunch of long positions that were created, and then go lower. I think it's a possibility. But, at the end of the day, Bitcoin can also very much see a rejection from here and come down to the support of the bear flag, which once you revisit, it's very likely for me to get to 60K and potentially even below. All roads for the intermediate short term point to lower levels for me. But in the macro, you guys know that I think in Q4, likely the low will be made. And then we start running back towards the upside going into 2027. I think the fact that Bitcoin is diverging from the S&P 500 just shows that for the intermediate term analysis, the 4-year cycle is more important than the M2 money supply. The M2 money supply determines macro direction of Bitcoin. The more money that is printed, the higher that Bitcoin goes to. Because the financial system is broken and because they are in eternal debt, which is currently beyond pay, regardless of how much revenue the country starts making, they need to print more money to pay off all of their debts. And whenever money is printed, whenever you go into war, so on and so forth, they devalue the underlying currency that you trade most things in, which is the US dollar. As the US dollar becomes less valuable, you see something called asset price inflation. So the stock market appears to be going higher, which it is, but in reality, it's going higher at a slower pace. It's just that the dollar is losing value. And because the dollar loses value every single year, roughly about 8%, that is a higher loss of value than the interest that a bank pays you. And it's certainly higher in loss of value compared to the average wage growth that the average person sees every single year. Wages are not inflation adjusted unless you live in a hyperinflationary country. Wages are commonly not inflation adjusted. So since 1971, the average wage is up 400%, but education is up 2,400%. Healthcare is up 3,000%. Housing is up 2,000%. So you may get a pay increase a little bit every year, but that little bit, which may not seem as a huge difference to what inflation is doing, over time, that gap is going to become very noticeable. And that noticeable of gap is going to translate to much higher cost of living, meaning a lower standard of living. And the way to escape is by buying assets that benefit from asset price inflation. The asset that has appreciated the most in the past 15 years that has a substantial market cap is Bitcoin. And I think the opportunity for Bitcoin is higher than anything else. I think that regardless of however severe the correction for the S&P will be in 2027 and beyond, I don't think that this is the level of correction that we will face, by the way. I think it will be much less, maybe till here. I think, when you zoom out and look into the upcoming 5 years, 10 years, 15 years, 20 years, the trend is clear. I mean, you're always going to go up. That's it. And I think if you go with Bitcoin personally, I think your upside is going to be greater than the upside you will face with the S&P 500. Look, I'm young. I have the ability to take risk, which most people don't, and I understand that. But I've believed in something, and I've gone all in. And if it doesn't work out, then okay, I lose a couple of years from my life, and I need to refocus and readapt, which I can do again because I'm young. I understand that most people who watch these videos are not my age, so I don't blame anybody for obviously not going all in into Bitcoin. It's completely understandable. But I would take the time, especially in the bear market, to learn what it is, how it offers a massive solution to a problem most people don't know about, and why that gives you asymmetric upside if you choose to start accumulating. And if you are looking for a place to accumulate Bitcoin, I would definitely recommend checking out Bybit. Using the Bybit link in the description down below. That is where you can buy Bitcoin for the first time with Apple Pay credit card. If you want to derivatives trade Bitcoin and cryptocurrencies, check out the links for Weeks and LoveX, and also check out the link for BTCC to get up to a 10% deposit bonus. And you can also trade things like gold, silver, S&P alongside cryptocurrencies. Thank you all for watching. I hope you enjoyed this video and see you all in the next one. Thank you, and as always, bye-bye.